Hello students and welcome to this video on cash flow statements. This is a question called Bongani shops that I have posted that you can retrieve, and you will see here they have given you statement of profit or loss, a few interesting things such as a question mark for the depreciation. As always, you have your profit before tax, there's a tax expense, and interestingly, there is a revaluation done here. You will see that the other comprehensive income is the revaluation, a surplus that was listed there. They've also given you a statement of changes in equity. Here you can see that there were clearly some issuance of shares. Then you will see that they've also given you a statement of financial position. This is very, very important, so that you are able to calculate the working capital, also to see if there are any PPE purchased, sold, etc. And then they've given you some additional information. The additional information says that there was an inventory write-down of 50,000. There's some depreciation on the intangible assets. So what are intangible assets? It's assets that cannot be touched, but they still comply with the definition of an asset. So in terms of the conceptual framework. So it might be something such as a website. It might be something such as, if you're running a KFC, it can be a recipe, it can be a copyright. So it helps you to have economic benefits, but it cannot be touched. It does decrease in value, because obviously over time you can't use a website for 100 years. Consumer behavior differs and technology advances, so you need to keep up with that. Right, then for other income, they've also given you there some rental income. Then you will observe in note number 2 that they say property was revalued at the end of the current year, and part of the plant was disposed of at a loss of 10,000. It had a carrying value of 100,000. Then there was also some plant acquired for 2 million and some listed investments that were disposed of. Right, so this makes sense. If I go to the statement of financial position, you will see that clearly I made the investment during the year, and you will also see that I sold the investment, my other investment, during the year. Then you will see that there's some authorized share capital, and there was also a loan that was due on 30 June, and that there was a payment made. Then the required part says you need to do the cash flow statement, you need to do the indirect method. So I've already compiled the memo, but here on the right hand side there's a few things that I want to explain. So you start with profit before tax. You will see in this question I use the template, and then obviously if there's no amount I just put a 0, or if the item is not applicable I put a 0. Something that's quite important is to remember to insert your heading. So you will say Bongani shops, and this is the, to insert another line, this is the reconciliation between profit before tax and the cash generated from operations, and it is for the year ended 31st December 2014. So this ensures that you do get the mark. You will see that there's a mark for layout and presentation. So this will ensure that you do get that mark. Alright, so we start with rental income that was given to us. That's an item of separate disclosure. Please note that these items are eliminated, so we will use the opposite sign of what we normally use. So the rental income is minus the interest or the finance charges. Please note that in this question it's called finance charges as well. Finance charges there was given to you. Then there was no dividend income, there was no interest income, and the sum total there was 26,000. Then for items of non-cash you had depreciation, and this was for the intangibles, and then the depreciation here was for the PPE. So this 100,000 was given. I will explain just now where the 375 came from. Then the loss on sale was given, it's added back, and the inventory write-down was given as well. So let's quickly look at the depreciation for the PPE, how it was calculated. So if you go to the PPE note, or if you go to the PPE information and you have to set up a basic note, you will find that there should be an opening balance. The opening balance in the question was given as 10, 5, 20, 000. Then they talk about a revaluation, and the revaluation was 205,000. There was a sale, and the sale should be at carry value. So the sale was 100,000. And you will also find that there was an addition to the plant, and that addition was worth 2 million. The closing balance we need to get to is also displayed to us, and that is amount of 12,250,000. Here we need a balancing figure. So I'm going to just get a subtotal. Let me just get a subtotal. I'll write the total there. So if I get to a sum total of all the amounts that I have so far, you will find that it is higher than the closing balance. So here we need a depreciation. And the depreciation will therefore be the difference between the closing balance and the subtotal. And there you get the 375. You will notice that it's a negative because we minus depreciation when we do the PPE note, but you will see that we added it back here because I want to eliminate it. Then you have to go and take into account the next interval, which is your working capital. So let me just extend this so that you can see. All right, working capital. So the working capital, I started with the inventory. Please remember that you need to do it in terms of LA lock. So inventory is an asset. That means that the opening balance is added and the closing balance is subtracted. For inventory, there was also a write-down that needs to be minused. Please don't forget about that. This question had accrued expenses. That's a liability. So the opening balance was minus, the closing balance was added. Also for the creditors, the opening balance was minus, the closing balance was added. Then there were debtors. Here I added the opening balance because it's an asset. I minus the closing balance. And that gave me cash flow from operations. If I calculated all the sum totals, starting with profit before tax, add and subtract all the subtotals, I get to 596,100 cash flow from operations. Right, then we need to do the cash flow statement. Again, make sure that you have a proper heading, and just make sure that you do have the name as well. Right, so we start with cash flow from operations, basically copy and paste there. Then we start with the items of separate disclosure. So what is important is to remember when you're on the face of the statement, you will not be calculating in terms of the elimination. You will be calculating just the effect of the bank account. So I started with the cash flow from operations, added the rental income minus the finance charges, and then there's a calculation you had to do for income tax and dividends paid. So let's quickly look at that. If we start with the SARS, you will see that there's an opening balance as well as a closing balance given. So if you go back to the question, you will find that SARS was 219 and then 63. Then 63,000. And then, of course, we had an expense during the year, and that was given as 221. And we need to calculate here the bank. So what we will do is add up these two on the credit side and minus the amount for the closing balance, which is J9, and that gives you 377. So that 377 was deducted here because that's the amount that was paid to SARS. Then for dividends paid, we also need to do a calculation, shareholders for dividends, and there we also had an opening balance and a closing balance. So the opening balance 25,114, and we also have an amount declared That one you will find either in the additional notes or in the statement of changes in equity. Here we can clearly see that the dividend declared was 300,000. So there's 300,000. Then for the bank, again, we need to calculate the balancing figure. So I will again minus the closing balance, which is now J20. So there is the 3,111,000, and that amount was deducted here as dividends that were paid. If you add up your cash flow from operating activities, you get to 118,000. Then we're moving on to investing activities. This is quite an easy one because they told you that they purchased plant for 2 million, so it's an outflow of cash. Then there was an asset that they sold. They tell you in the question in additional note number 2 that it had a carry value of 100,000 and it was sold at a loss of 10,000. So for this plant that was sold, you need to say 100,000 minus the loss of 10,000. Had it been a profit, you would have added it. And when you sell an asset, then obviously you get money, so it increases the bank account. Then you will see that they also disposed of a listed investment. If you go to the statement of financial position, you will see that they used to have a listed investment as a current asset. Now there is nothing, so they should have disposed of that, and they got money. You will observe that the question told you that the listed investment was disposed of at its carry amount, so that means that there was no profit or loss that occurred there. Then there was also an additional investment that was made. If you look at your listed investments under non-current assets, you will see that previously there was nothing, and then they invested in S Limited. So they should have made an investment there and spent some money. So therefore that represents an outflow of cash. So the total for investing activities is 4,070,000 negative. Then we need to go and look at financing activities. Financing activities consist of two things. It is your loans and it is your shares. So let's first look at the loan that was a down payment was made for. So if I go to the loan, you will see it used to be 3,890. It's now 3.5. So that difference gives me 390, and you can clearly see that there was a down payment made, so you will have lesser cash. Then with regards to share issuance, if you go to the statement of changes in equity, you can see ordinary share issuance was 1 million rand, preference share issuance was 3.2 million, and if you reissue shares, you get money. So that gives you a total for financing activities of 3,810,000. If you add up all your totals, which is now, I will just quickly highlight the amounts in yellow, it will be this amount, and this amount. If you get the sum of that, the change there gives you a minus 378,000. Then the cash at the beginning and the end of the year was given to you. So if you just go to the question, you will see that it used to be 430, it's now 52. So you will agree with me, you used to have 400,000, you now have 52,000. There was definitely a decrease in your cash available. So if we look at the decrease there, it used to be this, now it's this. So there should have been a decrease in your money of 378,000. And you can see that that also gives you the sum total of all the other totals. So that means that this question does balance in terms of cash flow. Right, so this was quite an interesting question. Also interesting in terms of having depreciation for two different types of assets. I hope that you do work through this question and you try to get to these answers. This serves as an additional question. So, and if you do have any questions, please stop by so that I can re-explain. Thank you so much for watching the video, and I will see you around. Goodbye.